The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. I've got Chip Nellinger here from Blue Reef Agri-Marketing to talk about what's going on in the world of agriculture. Chip, how you doing, bud?
Hey, doing good. How you doing, Casey?
Doing all right, man. So you've got some moving parts here, to say the least, and it seems like every day we add a new moving part to what's going on in the world. So you've got, obviously, reports are coming out talking about a big crop. I think that's overshadowing what we're seeing there. We saw, for the better part of last week and this week, a $3 or a 3 in front of December corn, which scared the hell out of a lot of people. This morning it got to right about $4, and it's kind of working its way from there. You've got this crop. Let's talk a little bit about the crop for a minute. I mean, as you take a look what's going on there, we got a lot of road ahead of us yet before we get to a quote unquote record crop. But you also have the acres, planted acres that are also factored into that. So I guess talk a little bit about that, Chip, and what you see happening there.
Yeah, the market seems to have gotten a little bit ahead of itself in the fact that, I think it really is expecting, the expectations now are for record corn yields, maybe as high as 183 to 184. Our trend line's at 181, and there's people thinking 53 53 and a half bushel bean yields. It's just, for the most part, everyone's got the rains, that they've needed. I saw that Illinois will go down as potentially the 5th wettest July in history. So, when it's raining everywhere in July and, people are getting the rain, it is going a long way towards helping yield. So whether we get there or not, I'm not sure. The market is a futures market, so it's kind of really looking ahead of itself here and factoring in these big yields. There's a lot of concern about bean demand on top of this big crop. We finally did this week see China come in and buy some beans. So there are some very real demand issues. But we've got this upcoming August crop report here on the 12th of August, and they are going to incorporate RMA data. Finally, it's the first time I remember them incorporating RMA data into the August crop report. That likely means they're going to shave acreage back because of the prevent plant and the late wet spring. So that's something that could maybe stop the slide a little bit. Quietly all through this, corn demand's really good. We are essentially crushing or grinding a record amount of corn for ethanol. Our exports have been, at or above the pace they need to hit the USDA target. And so things are kind of firing on all cylinders as far as corn demand right now. So, throw into that mix now, we've got all these economic uncertainties and the stock market starting to have a pretty decent correction to the downside. You've got a lot of fluctuations in the foreign currency markets and interest rate markets. And so the funds are sitting here with a record short position to start the month of August. The market expects record yields. We've got to get through the month of August. There's some heat out there in pockets, and we need some more rain in August to finish this crop out. And so, likely the market's kind of ahead of itself. And, it's just going to take some time now to figure out what that yield's going to be. I mean, remember in the August crop report, the way they changed this a few years ago, they do not do field surveys. So it's likely they're not going to move their target from trend line at 181 and 52 on beans. That alone could maybe disappoint the market a little bit because the market's trading, well beyond that, I think, as far as yield expectations go.
Yep, and I think that's a key factor. So there's you've got what you just talked about going on there. You've got what's going on with the Fed. The Fed came out, didn't do anything. Everyone's expecting to see at least a 0.25% cut in rates. Didn't see that happen. They're talking about pretty much, hey, it's going to happen in September. You've seen the stock market kind of go south here pretty quick. Talk about some relationships you see there where you might see some money flow into the grains because of that.
Yeah, it appears like things are breaking a little bit, and especially as it relates to the Japanese U.S. dollar, Japanese yen U.S. dollar relationships. All these big funds, right? They're record short in our grain market, on corn and beans anyway. But these funds trade everything. They don't just trade grains. They don't just trade livestock. They trade everything: bonds, stocks, foreign currencies, and they do it in a massively leveraged way. And it probably would have been easy to kind of start letting the air out of the balloon if the Fed did decrease even a quarter of a point on this July meeting. Now the expectations are now for the September meeting that they're going to do a 50 basis point cut. But the problem is between now and the end of September, when that meeting is, there's a lot of financial market turmoil happening. We've had a huge miss on the jobs, the unemployment report. We've had some other really big misses on economic reports here. So it does appear like the consumer is starting to crack. I know we've talked about this for months and months about, can the consumer domestically, with all this inflation, hold up? And it appears that they're not. And it appears that companies are not. Lots of layoffs. We've heard about the ag stuff in Deere, but now you've got, a bunch of tech companies laying off people. And so the stock market's put a big correction in. That alone, it's not that it corrects, it's just how fast it corrects. And the as rapid as it has corrected here, and as big a moves have you seen in the Japanese yen and the Japanese stock market, the leverage gets to people. And so if you're into this kind of cash crunch margin call situation, it could actually be stimulative to grains, right? Because they oftentimes, when they get in a problem over here on one, they got a margin call over here on some financial trade they're at, and they've got a ton of money made being short corn or short beans. They just get out of what's profitable to generate the cash to help them with this position that's underwater. I don't know that you're going to see that, but it looks like today, you're starting to see that. I'm looking at the prices here. We're kind of on the high. It's been a long time since we've seen, green on the screen in the grains. And I think some of these outside market fluctuations are maybe driving that uncertainty. They're just saying, hey, if the stock market can move that much, 1,000 points in less than 24 hours, we got to get some more cash generated. Let's get out of our profitable positions. Well, unfortunately, that also means they're long cattle. And so you're seeing the cattle market get hit a little bit, I think, is kind of the same correlation with the outside market fluctuations.
So let's stay in the cattle market there. Since you brought that up, good transition there, Chip. Professional broadcaster Chip Nellinger. If you're looking at what's going on in the cattle marketplace, you start, like you just talked about, you're starting to see some pressure. We've seen that over the last couple of weeks. We've seen this pressure start slowly building up, and feels like there's a crescendo coming here very soon. I guess your thoughts on the cattle market?
Yeah, much like what we just talked about in the grains, right? In the short run, it could be good for the grains as the funds get out of their shorts. You're starting to see that. There's always been a correlation with the cattle market and the stock market. Just from the standpoint that the stock market is and now it's not a really great correlation, honestly, but the theory is the stock market is a good proxy for the general health of the economy, right? You can't have the economy cratering and the stock market on all-time highs. Although it seems like maybe we have kind of been doing that here for a little while, but now that the stock market's rolled over and there's all this pressure, unemployment going up and pain with inflation still and high interest rates. The worry now is that you're going to squeeze the consumer, and beef is right at the top of the list where things get cut. We're gonna buy turkey and pork and poultry instead of higher priced beef. In the very short run here, I think the correlation is the funds have been long the cattle market for 18 months, and they're going to get out, right, with all this financial market uncertainty. But the bigger question is, can domestic demand hold together if you just continue to crush the consumer? And that's a real concern. It has been for a while. You've had companies like McDonald's and some of the fast food, franchises report very bad earnings, right? Misses on their earnings, and their stock has been hit. And so there's evidence now that even from, like fast food level, people are cutting back. And so I think that's a big concern for the cattle market right now.
For sure. All right, let's jump over and talk about what's going on in the hog market. The hog market is in a similar situation where you're seeing some things move there. Again, it seems like hogs get a day in the sun, and then they get 2 days in the dark. So I guess as you're looking at the hog market, what are your thoughts there?
Yeah, that's about as good an analogy as I could picture for the hog market. I think hogs, maybe the best thing can be said is there may be a fair value here, right? Because you tried to rally them. Typically, you rally in the summer. We didn't do that. We kind of put a counter seasonal rally in late winter. Sold off all through the time where we should be rallying. We're feeding a lot of hogs to a heavy weight, so we're keeping the pounds up there as far as the supply goes. We are seeing some good clearance. The exports have been really good. It looks like domestic demand's good, probably because of that cheaper feature versus beef. And I think the best can be said is that maybe hogs are kind of at an equilibrium point here, that supply and demand is kind of evenly matched, where they might not have to make a huge move one way or the other. Corn meal prices cheapening up, so it's been a rough go for the hog producer here. Unfortunately, it may not have a lot of silver linings out there, but there may not be as much downside maybe as like the cattle market could have here.
Right on. All right, let's shift our focus down to Brazil for just a little bit. So if you take a look what's happening in Brazil, they've had epic floods, epic dryness in the north, flooding in the south. If you look at, we're during a typical dry season now, but because it's been so dry, the dry season's even drier than it normally is. I guess so. As you're looking at the pressure coming out of Brazil, you've seen China come to the table and buy a few things from the United States. earlier than they probably would have. I think a lot of that's based on what you see happening coming out of Brazil. So I guess your thoughts there.
Well, Brazil's kind of the 10,000-pound elephant in the room no one wants to talk about, right? They've had 4 back-to-back problems with production. That is historic, right? Like in our modern time, that's never happened. If you're in Las Vegas and you see that type of a trend, the house always wins, right? So there's a high probability
Right.
that they even things out on their next crop cycle and have average yields. Their average yields are almost as good as ours. And I read something earlier this week that they've increased acreage 16 years in a row in Brazil, and they're set to increase acreage again this year. So on paper, they could potentially raise, if they have average yields, a 6+ billion bushel bean crop. We're going to raise about almost 4.4. So like 1.6 billion higher than us. That's the problem. Now that won't be realized until, March, April, and we got a lot of weather to get through down there. But that is the real problem longer term with the United States staying competitive with what the sheer amount of bushels Brazil could pump out of there. Now they have all kinds of problems, like you mentioned. They need to get healed up from some drought. They've had massive flooding. They've got a lot of political problems and economic problems there. So it's not like it's all rosy or that they're guaranteed that, but that's what keeps me awake at night is the fact that, we think we have problems right now with too much supply on the bean side. You put a 6 billion bushel bean crop out next winter out of Brazil, and we got some serious issues. So I think that needs to be on our radar, but that's far enough out that there's going to be a lot of uncertainty. But I think that, in my mind, is really what we need to plan towards as far as building into our risk management plan. The fact that we're going to quickly become, kind of the world's, plan B when it comes to the supply of beans for sure. And they've been much more competitive at raising corn down there as well. So it's a real issue. But right now, like you mentioned, we're starting to see some pretty good exports on corn continuing, and we're starting to see China, snooping around for some beans here. That's good to see, and that's right on time. Typically, you see that as the supply out of Brazil starts dwindling, and China comes to us. So we've got a window here, maybe some better demand on the bean side, but it might only be temporary into next winter before Brazil and the Southern Hemisphere has their new crop supply available.
Let's jump over. Last thing here, let's talk about energy real quick. As you look at oil right now, you're seeing it hovering in that mid to low 70 range. Came down quite a bit from almost $10 here over the last month and a half. A lot, I think, again, as like you're talking about, it's a signal of where we're at in the economy wise. But I guess as you look at that, Chip, what are your thoughts there, and what are some of the fundamentals you've seen in oil right now that could drive some factors, I guess, here in the future?
Yeah, oil and energies in particular are very interesting. They always are. I think that the crude oil market was kind of early tipping us off that there's a problem not only here but in the world with the economy slowing, right, and demand weakening. And I think we would have been on our way under $70 if it weren't for this re-escalation between Israel and Iran earlier this week. It shot crude oil, $4 or $5 off the lows very quickly. And so there's always that geopolitical risk and the tensions in the Middle East and the potential for an all-out war between Israel and Iran, and that could explode energy prices higher on the one hand, but then it looks like on the other hand, we may really have kind of a slowdown beginning worldwide in the economy and demand weakening. So that means there's probably going to be massive swings, right? On the one hand, I mean, no one wants higher energy prices, but ethanol margins, renewable diesel, biodiesel margins are massive right now still, and that's one of the bright spots domestically for corn and bean demand is ethanol people making a lot of money. Soybean crushers making tons of money, probably record profits right now. And if corn and beans stay, at this level, even if they bounce a little bit, and energy prices continue to rally because of the uncertainty geopolitically, it's just going to add, maybe more potential demand for corn and beans. So I guess that's a bright spot. No one wants to see war escalate or anything like that. I'm not saying that, but the volatility in energy prices certainly hurts consumers in their pocketbook on the one hand. On the other hand, might be bright news for renewable energy, renewable diesel, and ethanol. So got a little bit there for everyone in the energy markets, and they're certainly likely going to be wildly volatile for the foreseeable future, and that's definitely going to affect not only stock market and our dollar, but also our grain and livestock markets too.
Yeah, I didn't realize there's a bunch of geopolitical issues out there right now, Chip. So
yeah, and by the way, there's an election coming up. Have you heard that?
Yeah, who's running for that, by the way? Anybody? Have they figured that part out
I'm
yet?
not sure yet. Yesterday I heard, but that could change. By November.
It's a fluid situation, Chip. You never know what's going to happen there.
That's true. Keep everyone like the U.S. voter is the proverbial mushroom, right? Like
yes.
Keep them in the dark. And there's another part to that.
Yeah.
To that too, and there's a lot of truth to that. We're all mushrooms right now.
Yeah, it's amazing how that swings. So good times. A lot of moving parts, Chip.
Interesting times.
Very true. A lot of moving parts, Chip. So again, working on that plan, understanding your plan, and then implementing your plan, such a big part of that. That's what you guys do at Blue Reef Agri-Marketing. So talk a little bit about how to get a hold of you guys and what you're doing with your customers right now.
Yeah, it's certainly gotten very real here with these lower commodity prices for certain, and a valid risk management plan and executing that plan is going to be critical. So we're always open to talking to people. If you have any interest in kind of a second opinion or a second set of eyes and ears on what you're doing, certainly reach out to us. Our main office number is 309-550-7213. We'd love to chat with you. No pressure, no obligation, but it's a challenging time, and people need some help and an extra set of eyes and ears out there right now.
Right on, man. Well, Chip, appreciate you being on the podcast, man. We'll catch you again next time.
All right. Thanks for having me on, Casey.
Right on. Chip Nellinger with Blue Reef Agri-Marketing. Make sure you guys reach out to him with your marketing plan questions. So I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the YouTube channel, which is the Moving Iron Podcast YouTube channel, and go to movingironllc.com for everything Moving Iron related. And while you still can, go to TikTok. You can check us out over there. So with that, I'm Casey Seymour with Chip Nellinger. It's going to be smart, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data. It's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century.